Hello and welcome to today's NinjaTrader Ecosystem webinar event with Kris Lassen of LizardIndicators. My name is Tiffany and I'm a platform representative at NinjaTrader. I'd like to mention that it is important to understand that there are substantial risks in trading commodity future contracts and Forex. You should carefully consider whether such trading is suitable for you. It will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker and could even incur losses beyond these amounts. Please inquire at the link provided for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor recommendation, but simply education in nature. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage directly at the information provided. The NinjaTrader ecosystem website is home to hundreds of third-party apps and services all centered around the NinjaTrader platform. With new tools added nearly every day, the NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools and services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and on-demand video archive to view event recordings at the link provided. For up-to-date information, be sure to like or follow NinjaTrader on all social media platforms. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are in the latest version of NinjaTrader and pick up a free live data trial, please visit the following link. You can purchase or lease NinjaTrader at the following link. If you're just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. We are very excited for this unique event in which Kris will demonstrate market structure and swing trend analysis. Thanks again for your attendance today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Kris. Please take it away, Kris.
All right. So for those of you who are already familiar with us, you're probably wondering when we're going to update these intro images here. I'm sure we'll get to it one of these days. But if you're a new acquaintance, we've been part of the NinjaTrader community for many years now. That's me to the left, Kris Lassen, and Harry, also known as Fat Tails, our market lizard, to the right. His indicators are some of the most downloaded for the NinjaTrader platform. You'll often see them discussed in the NinjaTrader support forum, as well as over at futures.io. These are the AMA series indicators, previously the ANA indicators. As for myself, I previously ran a company that focused on sentiment analysis for financial news. So looking at how emotions and psychology drive the markets, very much at the forefront again these days. And markets are certainly driven by greed and fear in the current environment. So that's interesting to see that again. All right, so a quick overview on what we offer. First, we have the Indicator Spotlight newsletter that you can subscribe to free of charge. On a regular basis, we publish a newsletter featuring one of the library indicators. Subscribers get information on a trading setup or a general concept from technical analysis, how to apply it, along with a free download of the indicator itself. As I mentioned, this is based on the library, and if you're just starting out, that's a great place to find and explore a wide range of trading techniques: support, resistance levels, momentum, volatility, volume, trailing stops, you name it. Close to 150 open source indicators available here. And even if you're an experienced trader, chances are you'll find some pretty useful tools there. So that is our baseline offering, all available for a one-time flat fee of $150 US. And then we have the premium suite, including the professional session tools, multi-time frame opening range, the pivot and VWAP packages, as well as our flagship tools for entry timing, the auction bars, the zero lag oscillator. And then we have the Ichimoku, the Lizard Renko, and as of today, the swing trend indicator as well. So swing trend analysis is a classic approach for defining trends and serves as a basis for many methods for interpreting the markets. Fibonacci retracements, pattern recognition, divergences, Elliott wave, just to name a few. We won't be looking at any of those today, but rather focus on how swing trend analysis can be used to determine a overall market bias, adding a level of confirmation independent of other price calculations. We will, however, look at a use case here, expanding on a simple crossover strategy we discussed previously, using the trigger lines indicator from the library. Main idea is to use two independent types of trend analysis, one based on the swing trend price action observations, and the other a classic moving average approach, and then combining the two. Finally, we'll test the concept with Renko bars. We often get questions on backtesting with this bar type. Strategies running on Renko bars will typically show very promising backtest performance, but for some reason they tend to fall apart in a real-time scenario. And we'll look at some of the reasons for that. Mainly has to do with the preset grid defined by this bar type, causing the open, high, and low values not to display correctly. But let's get started with the swing trend, which is the main focus, of course, today. And then we'll get back to the Renko bars in a bit. So market structure refers to a continuous series of higher highs and higher lows. See that here in a uptrend. And we had this bullish structure, and then towards the end here, a lower high. That alone is not enough to mark the beginning of a new trend. It's the precursor, but the trend change can only occur once the prior swing low breaks. So in other words, market structure is a technical term for describing what the market has been doing in the past and what it needs to do in the future in order for the bulls or the bears to maintain their positions. So this is the opposite end of the stick, continuous lower lows and lower highs. And in order for the trend to change back to a bullish structure, we need a higher low and a price break above the prior swing high here. As mentioned, the swing levels serve as the basis for many types of technical analysis, Fibonacci retracements, pattern recognition, divergences, and the observations are relevant on all time frames, although different time frames can show you different market structures, obviously. So this is a higher time frame daily chart of the ES showing year to date up until when this presentation was approved. And we'll use that to discuss the swing trend features here. So a new swing high is detected when the current bar marks a new 5+1 bar high. So we have the default setting here, swing strength of 5. And then the range from the prior swing low to the new swing high needs to exceed the deviation multiple. In this example, it is defined by a 3 times multiple of the average true range, but you can also set this to average range, percentage points, or ticks. So with the default settings, the indicator will use both swing strength and the deviation multiple to determine new swing and swing high and lows, but it's also possible to use just the swing strength or the deviation multiplier by themselves. So for swing lows, it's the same rules in the opposite direction. So a new swing low is detected when the current bar makes a new 5+1 bar low, 5 again being the swing strength here, and when the range from the prior swing high to the new swing low exceeds the deviation multiplier. Finally, we have a paint bar definition, trend definition here. The major trend refers to the breaking of the higher low and the lower highs. And then the minor trend shows when the price breaks above or below the trailing stop line. So that's then drawing a new swing leg up or down. We also see that you can measure the swing legs here in points and volume in the boxes here. And there's also a data series to determine whether a swing point is final or preliminary, and that can be used then to eliminate information for the preliminary swing point that marks the end of the zigzag line. Okay, so now we're zooming in a bit. We're looking at a Renko chart here. In this example, we have what we call a T Renko. T is for triple, a 1-to-3 ratio, a 3-to-9 setting here. Basically what that means is that a new bar will plot in the direction of the trend when prices move 3 ticks. For reversal, you need a price move of 9 ticks. And the swing trend indicator is set to mirror the Renko bars here. So we have a swing strength of 1 and a deviation multiplier of 9 ticks. So that's catching each reversal bar and setting us up for looking at the signals here. Major bullish signal is the green T, indicating when a new major uptrend starts. You'll have red T's for new major downtrends. And then we also have trend continuation scenarios, or a bullish key signal showing as this double triangle. And that occurs when a new higher low has been set by a Renko bullish reversal bar in the direction of the trend, drawing a new swing leg up. And so following the key signals, we have additional minor signals that will plot whenever we have these bullish reversal bars, again setting a new low and breaching the deviation multiple of 9 ticks in the direction of the major trend. All right, so coming up here, we'll look to see if we can combine these signals in a simple crossover strategy with the trigger lines indicator from the indicator library. Again, the main idea is looking at how two independent types of trend analysis, one based on market structure, the other a classic moving average approach, and then review a backtest report. So the trigger lines indicator is used as a trend filter here. So when the linear regression indicator crosses above the signal line, it's bullish, and vice versa. We're just using the default setting here with 20 for the short and 80 for the long period. So in this scenario, we had a bullish trigger line bias, allowing us to take swing trend and key continuation signals. Profit target and stop loss here is set at 100 versus minus 50 ticks. And we also have a separate condition for exit when the price falls above or below the trigger line. So a bearish trigger line indication here of the trend, the linear regression moving below the signal line, and then a bearish swing trend signal as the higher low is taken out here. And later on, we see a key continuation signal as well, but too late and taken out once the price moves above the trigger line again here. We also have a slightly additional requirement of the linear regression and the trigger line slopes here. We want to see them in a contradiction in addition to having this price above or below the trigger line. I'll probably follow this up with a little tutorial on how to set this up on your end, so you can do some testing for yourselves. Because now we're really getting into the interesting parts. It's fairly easy to show these appealing screenshots of good-looking trades, but you do, of course, need to verify with back and forward testing before you go live with anything. And most of you will know, of course, that moving averages and stop and reverse systems do not really work in a live trading environment. So adding market structure analysis to this approach will have a additional layer of confirmation that can help us qualify the setups. I think it's still too simple as a concept, but it's good for illustrating the signals here and some of the issues that you might have when backtesting on Renko bars, which is what we'll look at coming up here. Basically, there's a couple of specific challenges when it comes to backtesting Renko bars. Some Renkos will allow for plotting true price action, whereas others do not. And for us, it was important to address this issue because many of the tools available from our library will not display correctly if used with many of the Renko bars available on the market today. By now, most of us are familiar with the alternative facts, but with some Renko bars that becomes a issue because first, the bar open is chosen for aesthetical reasons. It does not reflect real price action, and that in turn can be a problem when backtesting your strategy ideas. There's also some issues with the zero volume bars and synchronization of multi-bar series scripts. So I know that this probably all sounds pretty abstract, so we'll just have a look at some charts here with practical examples to illustrate why this is important to be aware of. But first, if you're not familiar with this chart type, classic Renko bricks have no wicks, and depending on the bars that you use, they may not reference the true price action, so the true highs and lows. And we'll see that coming up, that you might have indicators that are affected by that, specifically the plots. Basically, the main objective of using Renkos is to expand on trending moves while eliminating congestion areas. And so these counter trend moves are hidden within the brick, so to speak. But when it comes to the reversal bars, the open that you see on the chart do not reflect real price action. As I said, it's just for visual appeal and in order to allow for this single brick size. So why is that important? Well, if you use market orders for your backtests, execution on reversal bars can be several ticks off. So with our Lizard Renko bars, we've added the option of displaying the bar wicks and the real open. And so we see that here. On a regular Renko, you would maybe think that the open is up here for this reversal bar, but it's actually down here. And same for this one. And we also note here the high-low levels are outside the regular Renko brick for some of the bars here. So here's a comparison between two identical 6E Euro future charts. And when comparing the standard Renko with the lizard Renko, we first see here that the swing high-low levels are different. With the standard Renko, the prior day high plot at 1.08545 and the low at 1.8095, whereas the lizard Renko had the high at 1.8575 and a low at 1.8075. So that is a difference of 6 and 4 ticks respectively. And therefore, if you use standard Renko bars to calculate session pivots, for example, you will not get the correct supports and resistance levels. Of course, you'll have the same issue with other session tools. So Fibonacci levels, opening range, range projections, standard Renko, high and lows will return alternative facts, as it were, the indicator plots. As mentioned, that is a issue for the library indicators. It's also a issue for the default NinjaTrader indicators and many other third-party indicators as well. So we've corrected this by just plainly making a distinction between the factual price data and the visual display. So just to clarify, with the lizard Renko, it makes no difference whether you display the wicks or not. You will always get the factual high and low values. So here we have a floating swing low. That's just a nerdy way of pointing out that these bars have the real price action data running in the background, and that they're not influenced by the visual display here. Okay, so next we'll have a closer look at the Renko Bar Open. It's important to pay attention to this, as I said, because opens that are based on a visual display, the backtest results might not be the best grounds for deciding whether or not to deploy your trading approach. As we saw, the reversal open is modified to allow for a single brick size. It is indeed a visually appealing open price, but it does not reflect the true price action. And so when you're testing with market orders, the bar open is used to establish entry prices. And therefore, if a backtest signal comes on a reversal bar, you might get better execution than what you would see in a live trading scenario. So in this example, we have a backtest execution of 1.8515, and comparing that with the lizard Renko with a true open, we see that the real execution price was at 1.8540, and that's 5 ticks away here. And so, of course, if you multiply that with hundreds or thousands of trades, you can see where that is going. And that comes in addition to a couple of other issues that we've seen with standard Renko bars. The alternative high and low values we already looked at, but there's also bars with zero volume and low liquidity scenarios, and expired timestamps, which may create issues when you're synchronizing with other bar series. Another popular Renko bar is the Uni Renko. Has the same issue with respect to market orders. So it's using this visually appealing open to establish the entry prices. But the Uni Renko comes also with a third parameter, the open offset. And that's used to locate the most visually appealing open, and many will test with a open offset equal to that of the trend setting, which is what we have here, and a 5-tick offset will then create a 5-tick distortion. And so if you're using the Renko for backtesting, the open offset should be kept at a minimum in order to come as close as possible to the real price action. Also, because of a bug in the Renko, highs and lows will sometimes be incorrect and could also impact your indicator output. And as for session volume, the first tick of each bar is counted twice, and that will lead to a exponentially inaccurate volume reading throughout the session. And yeah, as with the standard Renkos, the timestamps are delayed, and that can also create issues when synchronizing with the other bar series. So if you're using something multi-time frame related, just be aware of that. And yeah, just to wrap up here, illustrating why we made this comparison of backtest of the same strategy. So the swing trend and key signals aligned with the trigger line bias using different bar types here. We see the performance for the standard Renko and the Renko is significantly different than what we see with the Lizard Renko. So much more appealing profit factor and net profits here. So does that mean that the standard Renko and the Renko are better and more profitable for your trading? I think the short answer to that is no. There may be distortion caused by market orders based on this visually appealing open, as we pointed out. And the long answer is that there are two categories of Renko bars: those that make a distinction between price data and visual display, and those that do not. And so with the Lizard Renkos, you'll get the visual properties that make these bars so popular, but with real price action data that can give you a realistic expectation for the live trading scenario. All right, so that is pretty much what I had prepared for today in terms of content. So we'll now segue into the launch special here. Includes everything we discussed, all the new swing trend indicator, of course, along with the Lizard Renkos and the indicator library. If you've been with us for a while, you'll know that we typically launch with a modest but solid number of features. Those who get in early then benefit from later updates that typically include additional features. And we then adjust prices somewhat, making the early adopters feel very good about their decision on getting in on the launch event. Basically, all our products are one-offs, so no recurring payment or charge for future upgrades. So the list price for this is $540, and at $395, we have a discount exclusively reserved for these launch events. I think if you ask pretty much anyone in the NinjaTrader community, the library alone is worth this price, at least if you go by what others are charging. And yeah, of course, we're also well aware of the common objection here that it's just not necessary to reinvent the wheel. There are plenty of swing, trend, and Renko alternatives available already, but our objective was simply to create something with improved usability here that can be reliable, implemented for a system trading approach. So emphasis here is definitely on reliable. If you do not trade with the Renko bars, you also have the option of getting the swing trend alone with the indicator library here. The regular list price for that is 345, and the event special is 275 for that. Of course, if you're already a member, we have a special offer for you too. You just log into the membership section, and we have a extra special discount for this event. So go ahead and take advantage of that. All right, so this is where you can go and register for the launch promotion, lizardindicators.com/swing-trend. So if you've been looking for a reliable swing trend indicator and Renko bars, and you're looking for a good indicator library, this is the opportunity to dive into it. So I think with that, I'm going to wrap up this here. We'll have the event bundle up until the end of the week. So head on over and check that out. And let's see here if I can pull up this link here, and you can just drop it in the chat box here. See if I can get that done here. Let's see.
I've edited it for you too, Kris.
Okay, super, great, thanks. Yeah, so that's it for the presentation. So with that, I think we will just open for the Q&A, and let's see if I can look at the questions here. Scrolling through here. Can I try your indicators before I buy? Yes, we have a free 14-day trial of all the premium indicators for the library. That is unfortunately not possible because they are open source indicators, but yeah, for the premium versions, you can head on over and register for a trial. That's lizardindicators.com/trial. And can we download the indicator information for further analysis? We will have extensive documentation on this, so that is coming out. Harry is not quite done with the user manual, but it's a work in progress, so it's almost done. So there's a question here from Peter that moving averages don't work. So that is basically if you just use a crossover condition of using a short and a long moving average, that's you just end up in consolidating markets eaten up by the fees. So basically you'll need to find some additional conditions than just moving averages, because they do of course perform very well in trending markets, but the market is often non-trending, and so you end up giving away all your gains in these consolidating periods. So yeah, the idea of this presentation was just showing that you have the option of using the swing trend as a price action observation in addition to moving average. You can also, of course, use the signals for exit conditions. And so that's, for now, the features that we have for this, but we might be adding to this in the future. Don't use Renko bars, so you can use this on tick charts as well. So David, you ask why the backtest looks so much better with Uni-Renko. Well, it's the what I discussed on the open offset. So if you choose the most visually appealing open offset, you will transfer that error also into your backtest report. So just keep that in mind. If you use that, just keep that to the open offset to a minimum, and your backtest report will be more realistic. I just use that in the example here because we often have clients testing it with the open offset equal the trend requirement. So it's a frequent issue that we have to clear up. So Heinz, yes, good to see you in the room. There is the special for the swing trend for members, as I said, so just go ahead and log into the premium section and you can pick that up for $145 today. Amin, you ask if you can install on more than one computer. Yes, we have. The license is valid for 2 computers in your household. So if you have a desktop and a laptop or a virtual machine, you can enter 2 machine IDs. So Wayne, you ask about the follow-up tutorial, if I will show how to set this up in Bloodhound. Yeah, I'll probably do a quick tutorial on this. Probably won't get to it before early next week, but I'll send out a post with a link to that as well. Are the swing trend signals different than the zero lag indicator? Josh, yeah, it's not a oscillator, so the key signal is it's a similar approach to the zero lag oscillator, that you take the first retracement, but yeah, as I said, this is based on a swing high and low analysis, so a different approach there. Day trader, you ask if there are any templates we can use for the swing trend. I'll cover that in the tutorial, and so I'll show you how to set that up. It's very easy to work with. I personally use the plugins from Shark Indicators, so I work with Bloodhound and Blackbird. But Harry will also show you how to set this up with NinjaScript, if that's what you're working with. So we'll show you how to do that as well. All right, so I think that is it for the questions here today. If you have any additional questions, you can get in touch with me over at LizardIndicators.com. There's a contact form there. Otherwise at info@lizardindicators.com. So with that, I'm going to wrap up the presentation. Thanks a lot for checking in. Hope it's been of value for you, and I look forward to seeing you in the membership section. Kris Lassen, your host today, signing off.
Awesome. Well, I would like to end there, and I'd like to give a special thank you to Kris of LizardIndicators for a great presentation. Everyone in attendance here today will receive an on-demand recording of today's event, so just keep an eye out for that email. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope you'll attend them on a regular basis. We'd also like to remind you the information provided in this was of LizardIndicators and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spent with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem, and thank you again so much, Kris.